This is Alan Bush with ADMIS. Yesterday we did see stock index futures firm. This after the release of the minutes of the most recent FOMC meeting. Came in a bit on the dovish side. However, today we are seeing a little pressure developing in the indices. This after Germany rejected the proposal made by Greece to extend their loan terms by 6 months. However, we do feel that the main trend is higher. By my count, there are at least 18 central banks since the beginning of this year that have eased credit conditions in one form or another. So historically low interest rates globally should continue to support stock indices in the long term. Even though we are seeing a little pressure today, I am thinking that we will see a move back to higher on the day in the indices. Over in the currencies, the dollar index a bit higher today, the euro currency a little bit lower. This due to news that there seems to be a bit of a setback between the European Union and Greece as far as their debt negotiation situation is concerned. Also a little pressure in the yen. We feel that longer term the yen will work lower as the Bank of Japan, in spite of recent comments from Bank of Japan officials to the contrary, that the Bank of Japan will be forced to add more stimulus later this year. And the Australian dollar and the Canadian dollar are lower as crude oil prices coming under some pressure this morning, about $2.50 lower. This is a trend that will probably continue for those two currencies, even though some of these commodities may stabilize. Interest rate differentials remain negative for the Australian dollar and to a lesser degree for the Canadian dollar. And in the credit markets, still seeing the long end under some pressure overall. We continue to believe that once a deal is reached between the European Union and Greece concerning a debt restructuring, that should be when the last of the flight to quality longs are liquidated, especially at the long end. And I think that would be the timing to come in back on the buy side of the 30-year bonds. And I think at that point the bull market will resume. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.